Welcome to the Resilient Advisor podcast. This episode is part of the Advisor Growth Series. My name is Jay Coulter, and my partner in this series is Jay Hummel of the Wealth Advisor Growth Network. Today's broadcast is a first for us. We are streaming live on YouTube. The thought is that on future episodes, advisors will be able to ask Jay and I questions about the topics that we're covering that can have an impact on your practice. 2019 was a great year for the podcast, and I really want to thank you, the listeners. We're approaching our 100th episode, and it's a big milestone for any podcast. As a thank you, I'd like to mail you a copy of my book, The Resilient Advisor, but I need your help. Please jump on iTunes and rate the podcast, take a screenshot, and send it over to podcast@jcoulter.com, and we will send you a hard copy of the book. That is podcast@jcoulter.com. Mr. Hummel, I've been looking forward to this episode for a long time because it's such an important issue advisors face, developing a niche. Jay, let's start with, why do you think advisors are reluctant to develop a niche?
I think they think it's more difficult than it needs to be. And I think, I think they need to. And I think it's easy to go out and prospect and be everything to everybody because it feels easier. But in the end, you actually end up doing more work because you can't scale your practice because you don't have consistency in the types of prospects or clients you're going after and servicing.
Yeah, I'm a member of the XY Planning Network, and I've been there about 6 months, and it's very clear that Michael Kitces and Alan Moore, they kind of make fun of them inside of their conferences because they're always talking about niching. But the reality is they're always talking about it because it gets results, and advisors that have a niche or two grow significantly faster than those that don't. So let's do this podcast on the premise that the advisor's already sold on the fact that they need to develop a niche and they're struggling with how to do it. Could you walk us through the process that you use with advisors?
Yeah, I think there's a top-down approach and there's a bottom-up approach. Some advisors use the top-down approach, and so they look at their market. So if I'm sitting in Denver, the clientele may be very different than if I'm sitting in New York City. So they'll look at the demographic makeup. If I'm in a city where there's a lot of lawyers, it may make sense for me to be a lawyer niche. If I'm in Norfolk, Virginia, where there's a large military population, it may make sense for me to serve military families. So that's the top-down approach. I actually enjoy the bottom-up approach more. And it's when I ran a firm, it's what we did, how we decided the niche we were going to serve, is we assessed, what do we like spending our time doing? Who are the people that we really enjoy serving? And then more importantly, what were we really good at? So we came from the corporate world, so we found we were better working with corporate execs. And the second thing we realized we were really good at is we were great at stock option planning. And so obviously going after business owners who don't have stock options didn't make sense for us. So we figured out what we were really good at. And then we decided who we really liked to serve, who did we want to spend our time with. And we decided corporate execs made more sense than business owners because of the way we ran the firm.
So I've been overpromising a white paper on developing a niche for a long time. And the reason I have not been able to deliver on it is there's a lot of fluff out there on developing a niche. And so I think the first step that you're talking about, the bottom up, finding what you're good at, can be difficult for advisors. What are some tools, resources, or thought exercises an advisor could go through to start that process?
I'd go down through your best clients and take the 10 best clients and try to find if there's similarities or commonalities between the 10 to 20 that you not only, when I define best clients as clients that you feel really value your service, and most importantly, why do you really enjoy spending time with them, and why do you think you provide significant value? So I'd start there, number one. Number two is I find advisors gravitate their time to the things that they enjoy doing or are good at. You tend not to want to spend time doing things that you aren't good at or that you don't like. So look back over a week and say, where did you spend your time? And I guarantee you the advisors are going to find they're spending time with the things they're either good at or they like, and then that'll help them figure out the kinds of people that they should go out and try to serve.
Okay. So where I run into challenges helping advisors frame their niche is they'll say, well, you know what, Jay, I like golf.
Mm-hmm.
Golf really isn't a niche, but it but going deeper into that with people who like golf has an opportunity. Another challenge, and I find this particularly among female advisors, they'll say, I specialize in women. What? That's half the population. That's not really a niche. What are some of the better niches you've seen developed, and maybe, Jay, also some that you don't feel work?
So, I tend to start, and I oversimplify it, but I sort of said back where I started, which is I sort of see people as there's executives and there's people that are in the corporate world, and then there's business owners. I think that if you just start there and say, am I really good at serving people who own their own businesses? Am I very good at serving working people? So I think you'd start there. Then I think you go down to size. Who are you really good? Are you really good at serving $30 million families or $10 million families? Then you can then go down to, on the corporate exec side, I've seen firms be really good at picking companies. We're going to pick 2 companies and we're going to focus on them. And that tends to be really good on a geographic location, because you may have a corporate headquarters where you are, or you might have a satellite office where you are, or they pick a niche on, I'm really good with lawyers, I'm really good with doctors, I'm really good with a specialty. So that's sort of the framework I'd really go down. Your point is really a good one, which is the ones that I see that don't work are when people are overly generic. Because the whole point of a niche, and again, we're assuming people are already sold, but I believe the only reason a niche is it allows you to market more effectively. It allows you to differentiate yourself in a very, very crowded world. And 3, it allows your clients to feel like you've created a customized approach for them, even though you're really in the background creating a very scaled business because you're really good at what you do. One lawyer tends to look like another lawyer. A corporate exec at Procter & Gamble tends to look like another executive at Procter & Gamble. So it allows you to customize and commoditize at the same time.
One of the best examples of niches that I found was in the mid 90s when I started out in a Dean Witter bullpen. Because I was in Atlanta, Georgia, there were several folks focusing in on airline pilots. And it was a very simple call. Hey, I specialize in working with Delta pilots. You instantly identify with that niche. Some of the better ones I've seen here recently involve folks who go through the Certified Divorced Analyst program, and they specialize in helping people going through a divorce. And that's especially true if you're in a smaller market, because there probably aren't a whole lot of advisors with that designation. And when you're calling on those centers of influence, it really is a differentiator. And
Other one I've seen really recently that I hadn't seen a lot of is specializing on families with kids with special needs. And I've gotten a lot of phone calls looking for from prospects or individuals who know we're in the John and I are in the business. And that question has come up a lot recently, and I don't know what's driving that, but I can't think of 5 on my list in my network and in travel in the country that specialize on that. So it's an interesting niche that I've seen recently that I hadn't seen before.
That's interesting, because that was the last niche I was going to bring up. I have a client who, with access to a trust company, they're able to go and market that as their niche, because it is a very specialized process, and special needs have very, very unique planning situations.
Well, and you brought up something earlier. It's not a niche, but I do think if you brought up the golf example, I do think when you step back and think about niche, though, it's at the end of the day, you want to be serving clients that value you and that you value wanting to spend time with. And so I don't think it may not be a niche by definition, but I have found that if you look for clients that have common backgrounds or common hobbies or spend their time in different ways, it makes it a lot easier to build a relationship.
So I can give you a great example of that, and I'm going to change the brand of vehicle so that I don't give away this gentleman's niche, but there's an advisor in a large town who really likes, let's go with Porsches. And so, passionate about Porsches. So what he did is he created a soft niche where he does everything Porsche related, built networks, built friendships, goes to all the car shows, travels across the country going to different Porsche events, and has built a great business just by becoming friends with fellow enthusiasts of, Porsches. And so that's a great way to take something you love and find a soft niche. The challenge is when somebody asks what you do and you specialize in corporate executives at Coca-Cola, that's very easy to articulate. You can't really do that with a hobby niche.
No, I agree with that. The one last example, if we still have time here, is matching skill set with niche. An example I have on the negative side, I won't use the firm name. Hopefully, they're not watching because this is a bad example. But I visited a firm a couple years ago, and I sat down with them and I said, what's your focus for the following year? They said, well, we really want to focus on millennials. And I said, well, you what are you really good at as a firm? They said, we're unbelievably great at Social Security planning. How many millennials need Social Security planning? And so I just thought that was a great example of, I think, a lot of firms just mismatching who they serve and what they're good at.
Yeah. And lastly, Jay, let's wrap up with this. I get asked a lot if it's okay to have multiple niches. I go back and forth with that. What are your thoughts?
I think it depends on how big you are. I mean, I think I wouldn't have more than two, especially if you're a small practice. But I think it's okay. If you're a multi-advisor firm, I think that could be the future. And I think it's going to be the future on how you beat the retail markets like Schwab and Fidelity and the big boxes, because there's no way that they're going to be able to scale on a national presence the ability to build multiple niches. So, I think it's okay if you have 5 advisors in a practice. You could almost have 3 or 4 niches because those advisors are building teams around what they're really good at. So, but if I was a single advisor, I wouldn't have more than 2 niches.
Yeah, I agree with you. Where I find some concern is when an advisor on their LinkedIn profile will say, I specialize in corporate executives, small business owners, doctors, and accountants, and consider that some type of niching, and it's just not. I think you nailed it, Jay. A bigger practice, a bigger firm can have multiple niches because individual stakeholders can take ownership of the niche and be the expert. But as a solo person, 1 or 2 at most, right?
Yeah, that's exactly right.
Awesome. Jay, thanks for coming on. I'm very curious how this live broadcast goes. I'm hoping in future episodes we are able to have folks come on and ask questions as we're talking about these topics.
Would love it. Thanks for having me, Jay.
The information provided is for educational and informational purposes only and does not constitute investment advice and should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult an attorney or tax advisor. Resilient Wealth LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Resilient Wealth and its representatives are properly licensed or exempt from licensure. For Resilient Wealth information, please visit Investment Advisor's public disclosure website at www.advisorinfo.sec.gov by searching Resilient Wealth CRD number 301986.